Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, November 2nd, 5 o'clock Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market continues to be uptrend. So we've now had 10, 11, 12, 13 sessions plus the follow-through day since 10/14, when we had a change in character in the market when this last rally kicked off according to the parameters that we use for measuring market strength. And we continue to be bullish across all three time frames that we track versus the moving averages, and leadership also bullish. Short term, we use the 21-day exponential moving average. Medium term, the 50-day moving average. Long term, the 200-day moving average. When you see red arrows, you can rest assured that all 5 of the major indexes that we review during these videos are trending above all 3 moving averages. And in case you think I'm kidding, we'll take a look at the charts here in a minute just to make sure. So what happened today? A little bit of a pullback in mid and small cap growth leadership. They lagged versus the large cap indexes, which continue to just melt up. Maybe it's seasonality, maybe, I don't know what it is. You don't need a reason for why we continue to trend higher in the face of negative economic news and the doomsayers in the financial media and on FinTwit. But rest assured, we're in a rally, we're trending higher, leaders are working fine, and until that changes, we're going to be operating with the wind at our back, and when the winds change, we'll change. So the G5, our growth, our Revere Growth 5 ETF index lagged today, but was positive, just up a smidge, 0.7%. S&P 500 open just barely positive, but really the big cap index is just kind of trended higher for most of the day today, up 0.4%. Same with the NASDAQ 100, same with the Dow. Mid caps a little bit slower. It was the value portion of the mid caps that did the heavy lifting today. Same thing with the value portion of small caps. So up 0.2% on both of those. So let's get to the market facts, and then we'll take a look at some charts. But first, we'll take a look at the team running Revere here. We've got videos, 7 years worth of videos on our website. All you got to do is click on Daily Market Insight. You can see what our thoughts were on the market going all the way back to 2014 when we first started posting those. We never edit them. We never take them down. We're fully transparent. We're a fiduciary, and we are trend followers. That means when the market's trending higher, we want to be trending higher with it. When the market goes sideways, we want to take a little bit off and play it lighter. And when the market goes down, we want to get the heck out of the way. We've got the technical tools to do it. And if you're interested in this approach that will keep you from ever getting hit with the 2008 2x4 across the back of your financial head, give us a shout. You can email any of us, Dan, Tim, Hunter, Muriel, Alex, or Don at revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. And now to the charts. Let me blow this up a little bit so you can see. This is what I mean by a melt up. So here was our follow through day, 10/14 on 10th. So let's step back a little bit. We were in a correction. We tried to bust out of it on 10/7. The market had a big gap up. That was when the story was that there were reached an agreement so we weren't going to default, raising the budget ceiling basically. Looked like a fake gap as we then went down 3 straight days. Then on the 13th, we gapped down, finished at the top of the range, and a lot of leaders acted great this day, up high single digits and putting in bottoms, and some of them breaking out before the market had its follow through. Usually about half of the leaders will do this. They'll actually come out, make higher highs before the market does. Then the next day we had confirmation of that. Strong, powerful follow through day on 10/14. S&P 500 was up 1.71%. NASDAQ logged higher volume. And look what we've done since then. If you're wanting to fight this market, if you think we need to make lower lows, whatever you think, if you think the dollar or interest rates or whatever are going to impact us, and you resisted acting on price, you missed out on these gains as we've just, this is a very typical seasonal melt up that you see from time to time. You see them several times just on this chart here, from this period here. Back in March. You saw it from this period here in May. You saw it for 3 weeks here in July. Then we corrected, and now we're trending higher. We've got seasonality at our back, and we've got leadership working for us, closing at all-time highs today. What else do you need to know? That's follow what the market's doing and don't argue with it. So let's take a look at the NASDAQ 100, the QQQ. And you can see similar situation, gap up on 1014, just continuing to melt higher at all-time highs. Dow Jones Industrial Average, let's look at the DIA. Not quite as strong, but all-time highs. Can you complain about all-time highs? Some people probably can complain about all-time highs, but we're not going to here at Revere because we follow the trend. How about mid and small caps? Big day for these yesterday. Mid caps broke out, pulled back to the 21, all-time highs yesterday, mild follow through today, led by the value portion of it. Nothing wrong with that though. Big cap growth taking a break. And then here's your small caps right at the top of this 161-day long, 11% deep flat base that we've been trying to break out of several times. Let's see if we're successful this time, now that we've got seasonality working for us, and now that we've got some leadership working. Small caps led very strongly back last quarter of last year, and also up until mid-February of this year, when we had a stealth bear market in growth stocks. And you can kind of see this harsh pullback here from 230 to 207. But let's look at the growth portion of it, the IWO, where we pulled back from 339 to 280. That was a 19% pullback in 3 weeks, and still haven't recovered that since. But a breakout out of this recent area of resistance here, right above this, and now above this 315.48-ish area. 315.98 is the resistance from April. We clear that. We're looking at 340 on the all-time highs. And we've got leadership working for us. So more important than what the indexes are doing is what the leaders within those indexes are doing. Let's take a quick look at the five, the rest of the four. This is the first one that we track for our G5 index. The second one is the IBD 50 index. Can see some relative strength here over the last week of that. Forming a flat base, broke out, harsh pullback, but held the 200-day moving average, and now trudging higher. QQQJ is a mid-cap NASDAQ 100, forming a nice tight base. Really, this is being treated as a base on base according to pattern recognition, pushing all-time highs. ARK-K, this has been a laggard, but if Tesla keeps rocking, this one will continue to show relative strength as it has over the past 3 weeks. Long way to go back toward the 160 highs from 123, but relative strength over the last 3 weeks corresponding with the follow-through day that we saw, and PDP had a strong day today. And you can see that that's at all-time highs. So those are the main charts. Let's take a look at the market facts now, and we'll dive in and see the bull case and the bear case. So bull case, let's go back to the S&P 500 here and the key levels that we're looking at. This continues to have some checks in the bullish column on your scorecard, because we've got the rising ADMA. We're at 46.31 right now. We've got the rising ADMA that has been acting as support. Not really a big deal. That's like a ultra short term guide for how we're doing in the market. We break that, not that big a deal. We pay more attention to the 21-day exponential moving average. The prior all-time high, 45.46. That's the next level down, so we're a couple percent above that. The 21-day moving average, then you got the 50-day moving average here, which is 3.7% below current. Now, the 50-day moving average moved above this last bounce area here, which was on 9/23. This is when this was our first attempt to recover from the sell-off where we broke the 50-day moving average. It ended up that the 50 and the 21 acted as support, and we got another leg lower. So we wanted to see the breakout above that on the right side of this chart. We have seen it, and now the 50 and the 21 are above that. So that's additional levels of support as we go higher. Just think of every time that this ticks higher, it's money in the bank because of our downside protection rules. As our accounts grow, we raise our stops on the things that we own. Our stops get higher because of what the indexes are doing, and it's just more money banked that we don't give back to a severe market correction because we've got a sell strategy in place. So as far as news goes, we want to be on the lookout. We've got a Fed meeting tomorrow afternoon, so things will probably be slow in the morning. We'll wait and see what Jerome Powell has to say about tapering. Tech stocks led today, healthcare and biotech also strong. Oils, fertilizers, solars, and XME base metals. These took a break. These had been having some strong periods in the market lately, so just time for a pullback on those. Let's take a look at a couple of charts of leading stocks. Tesla, a little bit of a pullback today. Last night on Twitter, Elon Musk said, yeah, Hertz hasn't signed a contract yet for these supposed cars that they're getting, and also they're not getting any kind of a deal. We're expecting them to pay full price. It's not incremental sales for us. They're coming out of we already have more cars than we can sell. So that put a little bit of a damper on the stock today, but you can see an inside day on lighter volume than yesterday. That's good action. As long as we break a hold above Monday's low in Tesla, this big move up here keeps this rally intact. In fact, we're pretty extended, 22% from the 21-day moving average. This thing is, as far as big caps go, the leader in the market right now. Another small position that we have, Silvergate, 2 big days, a big day yesterday and a follow through today as Bitcoin and Ether are trying to break out. Here's ETHE. This is an ETF that tracks it at all-time highs. And GBTC, this is the Bitcoin Trust, putting in a little bit of a handle here, although Bitcoin, I believe, is broke 63,000 and made all-time highs. Let's see what other stocks that we own. SU had a little bit of a pullback today, down 3.6%, lighter volume than the big up days, though. A lot of oil stocks reporting this week. Again, this is a beautiful cup and handle breakout, 3 strong days, normal pullback so far. One stock that's given us some issues is CrowdStrike. Had a analyst downgrade yesterday as it was down 4.5% yesterday. Bounced off the 50-day moving average yesterday and today. These lows of these last 2 days, if they break, we'll be getting rid of this position. Zscaler's acting stronger anyway, but it's extended, so there's no real sound buy point for it. Talking about strength, we got into Dexcom on Friday, and that's had 3 days of a higher high after earnings. That's exceptional strength. Very glad to see that. So that's going to wrap it. You have any questions? As always, I'm on Twitter at @Vandenbord. Email Don@RevereAsset.com. The phone is 855-REAL-WEALTH. Wrapping up Tuesday, November 2nd. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.